Hello guys, welcome to an next video, new video. And in today's video we're going to be talking about the UK economy, which means we're going to talk about three distinct indicators that can actually give us a clue or an indication about what is actually happening to the UK economy, or what can we expect from the economy for the next year or two. And I hope you guys enjoy this video. So we're going to talk about first the UK inflation. So you can see the red line is the UK inflation. You can see the yellow line is the UK interest rate, and the blue chart is the UK unemployment rate. So as you guys can see, last time we gave an update on the inflation was, I think, pretty much when we were quite high, around 9 8 9 percent inflation. And we say that the other side, which measure this indicator, the orange line, which measures the the strength of potential move for this indicator. So this indicator are actually measuring only the inflation movement, so the strength of the indication, whether it's going up or down, and this is what it's measuring. And we then plotted the unemployment rate and the interest rate just to follow the inflation, see what's happening compared to the inflation. So these RSI and the MACD are actually just to measure the inflation itself. So this is why I wanted you guys to understand what we are seeing here. So I explained that these RSI leaving this 80%, see the red line, leaving this area, breaking the trend line to the downside, would mean that inflation would be cooling down for a little bit. And you can see basically that we cool down. We even touch the 2% inflation level, the desired level the governments talk about. So we touched the 2% around October 2024, but we can see past few months that we are noticing a significant jump on the inflation in the UK. And we don't recently, we had a jump about 0.9% base, almost 1% in inflation. So the inflation is now at 3.5%, which is not ideal. And for that reason, this means that the cost of living in UK is likely to continue to increase. And for that reason, despite of the interest rate being cut, you can see that it's reducing interest rates since August. At the same time, inflation is rising. So meaning that despite the cut of interest rate, the cost of living, the cost of things is still going up. That means there's a lot of money still in the market. And for the reason being is because we can see that unemployment rate is still considerably low compared to the other period on time. You can see that unemployment rate is, although making new highs. This means that this trend, this low trend, the interest rate, the unemployment rate being such a low level, is something that is going to change. So there'll be a change on this trend, which means we're going to see more unemployment rate more unemployment, less job for people. And this means that the money that is in the market that is allowing the inflation to actually continue to defy expectation or continue to go up is because there's still money being spent in the economy. And this is because we have a low unemployment rate. This is something sad to analyze and say, but this is how it works in our economy, and we have to see things the way it is. So I see that the unemployment rate now had a jump. It's now at the 4.5%. You can see here at 4.5%. And what is interesting is that you can see the interest rate is going, the inflation is going up, the interest rate is being cut, but the unemployment rate is going up. This means that if inflation continues to go up, and we can see the RSI is approaching a very important level like it did during 2021. So the explosion on the inflation that we saw, this RSI was telling us that this was about to get worse because the indicator, the oscillator was crossing the 50 level, this red line, meaning that there was a potential for the inflation to get out of control. So if this RSI crosses the 50 line to the upside, that means we're going to have high inflation. This is what happened here. And the moment the RSI was cooling down, was on this area, turned red above the 80 level, which is another red line you can see here. Crossing this line to the downside was an indication that the inflation was going down. And this is what happened. What is happening at the moment is that the RSI, after cooling down for a little bit, we didn't leave the 2% desirable level for inflation. We didn't leave it. We couldn't go further down. Actually, we start to go up again. And if this keeps going up and this indicator cross above the 50 level, this means we're going to have much higher inflation in the UK. This is what the data is saying. I don't know what is going to happen, but this is what I see. This is what you can see as well. And the combination of inflation, cost of living going high, and the unemployment rate, which is the blue chart, blue line, going up, it's likely that we're going to experience a very turbulent times in our economy. So people are going to be losing jobs. People are going to be not be able to pay their bills or to finance their lives because the cost of living is going to be much higher. There will be less jobs. In this case, if unemployment rate start going up, as you can see, starting to make higher high, you can see this is a high, this is a low, yeah. This is a higher high compared to this one, this high, and this is a lower, this is a higher low compared to this low. So it's a low in a higher low. And now we have a higher high compared to these 3 points. This is a high, higher high, and another higher high. That means it's a trend reversal. That means we can experience a higher unemployment rate in the future. And this is just following the trend, and we can see that the inflation and unemployment rates are going up together, although the government is cutting the interest rate. Whether they're going to be able to cut the interest rate further down, we don't know. Why? Because the inflation is going up. And if the inflation is going up, this is going to force the government to, and the banking system to probably have to raise or keep this interest rate the way it is at the moment, which is not ideal because there's people struggling to pay their debt, to pay their bills, And the only indicator that was actually causing the inflation to continue to go up is the unemployment rate being such a low level. So to conclude, we're gonna have unemployment rate going up. We're gonna have interest rate staying at this level or having to be raised again, which is not ideal. All of this because we might have higher inflation in the near future if the RSI cross this red line to the upside. I hope my analysis is right, is wrong, but if it's not wrong, that means it's right. If it's right, it's not good. It's as simple as that. We can see that despite everything, despite all this data, we can see the on the investment side for people who invest on the UK 100 index or FTSE, it's been a good ride for investors. You can see that the UK 100 index is holding, the FTSE is holding pretty well, making new all-time high. We can see basically being new all-time high in terms of the UK stock market. And you can see why, because we have this trend line used to be a resistance for this UK investment market. But recently we managed to hold this level of support around 8,000 pounds and made a push toward the 9,000, which is our Fibonacci 1.2, which is good. It's a good level. It's a level of resistance. That's why we experienced such a crash recently. But you can see as well that the investor managed to push and close. This is a monthly candle. You can see a candle like this is bullish for the market, for investors. This shows that they want to hold this level, the top of this trend line as support, and this is what they did. Although it pierced this level, but it's still holding quite reasonable well. And we can see that this monthly close was actually good. As I can see that is is a good, it shows a sign of a good recovery, although the 1.27 Fibonacci level is a resistance. We can say that this is a resistance level. The monthly candle cannot close above this level. If it goes above the 1.2 Fibonacci level, would be great. But at least there is a chance for the market this month to keep pushing and trying to hold this level of support. So in terms of, we say that because, there's no, you can see that the RSI is not in a critical level. It's not overbought territory, like 80. It's not on the 80, above 80 level, which would be like overbought. Like, if you see what happened here, although the market could be overbought for a very long time, for a year or more, and still the market can still go up. But here we can say considerably that the market is not overbought. There's still chance for the UK market to keep going up, and I believe it can actually reach the 1.6 Fibonacci level, would be at 10,000 pounds for a share in this case. So in terms of investment, although the job market looks really bad, in terms of investment, there is a chance for the market to keep going up, although most people will be struggling with unemployment. They will miss the opportunity to invest. They might not have enough money to invest because the cost of living is so high. There's not enough money to invest, but the market will do what the market do. And that's why most people need to pay attention and be wise with their money and not spend money instead of investing money to take chance of opportunity when they come. Gold, I think last time we updated you on gold was a long time ago, but we kept on our eyes on this Fibonacci level, this 1,913 thousand per ounce. Once gold broke this level, first we had this resistance, found support on this, historical trend line, found support, broke, other side broke, bullish, had a breakout, and gold, never seen again around this level. Now gold is sitting um, on our Fibonacci 2, had a little bit of resistance on 1.6, which was normal, but now it's very likely that gold can consolidate a little bit or just do because of the risk of high inflation. We can see gold push all the way to the golden pocket of 2.618, which would be crazy to see gold at $5,000 per ounce. So that's the update for today, guys. I hope you enjoyed this video, and if you enjoyed this video and want more analysis on UK market, uh, please leave your comment below and tell us what you think of this analysis, and if you need to improve anything or add an extra indicator to give us a more view of what is about to happen or what is happening with the UK economy, please let us know, and I will see you next time. Bye.